the market has changed a little bit for buying power for a lot of buyers. What things are clients of yours talking about? How interest rates have changed a little bit and how it's impacted.
I have some first-time home buyers who did want to put a contract on a house, and they had to go back to the lender and get the pre-approval because the interest rates had changed so much since March. So this is where I rely on you and the mortgage lender to, really educate the buyer and let them know what the interest rates are doing and to their monthly payments, and then the options that they have, which I know you have a lot of different options now with lending to help out.
I think clients should make sure that they're having full conversations around what it is they want to spend on a monthly basis, not just what they can afford. And then rates have changed a lot. Rates have went up 3% in a very short period of time. That's not normal in a normal market, but I do expect rates to continue to climb throughout the year. And I would expect that most clients want to know what they're getting themselves into. And so you need to make sure that you're encouraging your clients to have these thorough conversations with a professional mortgage individual, so that way they know what interest rates are going to impact them on a monthly basis, and of course what they can still buy, right? So if you have someone that you're showing homes to and they call you and tell you that they want to look at a $300,000 home because that's what they're approved for, if you start showing them a $300,000 home, now all of a sudden you need to go to 310 or 315 in order to have the opportunities to help them secure a contract. Now all of a sudden that borrower might not be able to afford that home, or they might be spending more on a monthly basis than what they really would like to.
Absolutely. And that's where, as a real estate agent, I need to know that, so then we can go down a little bit in price of the houses that we are looking at, because typically they are going over asking.
Are you having very many of your clients indicate that they kind of want to wait for a little bit to buy because they think things are going to change?
Yes.
Whether that be interest rates coming down or home values going down. What's your perception?
Yes, I do. And my advice to them is that the rates are going to continue to go up, and I do not foresee housing prices going down.
I mean, everything that I'm seeing from an interest rate, we will continue to see rates go up, at least through the later part of this year. And then we could see, rates come back down a little bit, but that's just down from that high. That's not, a big reduction in interest rates where we're going to go from, call it a 6% rate back down into the 2s or 3s. I really don't anticipate that we're going to see that much of a change in interest rates, but we will continue to see throughout this year an increase in interest rates. An example of this would be last week. Even though we're in a rate rising environment, over the last week and part of this week so far, we've actually seen rates come back down a little bit, but that's just a little bit down from where they were the week before, not down from what they were last year.
Yes.
Right. So we're still at a great rate environment. Historically speaking, these are still some fantastic rates. And so I would encourage anyone that's out there looking to buy a house that, from an interest rate, now is the time to buy.
Absolutely. And I've also had buyers ask me about buying down their interest rate with points.
Okay.
Can you let me know a little bit more about
that? A few things. One, the market's changed a little bit around points and clients paying points. In the past, clients have paid points to just strictly obtain a lower interest rate, knowing that they were going to hold on to these loans long term. Right now, you're seeing a lot of investors requiring a client pay points in order to obtain the home loan, because they have an anticipation that the market could change a little bit which means that they want to get, some more money up front from a potential client because they're concerned that they might refinance out of that home loan in the next year or two. So they're, sometimes charging, a quarter of a point. You can see stuff as high as 2 points that they might charge a client up front in order to close on a home loan, just to get that extra money up front, knowing that they're not going to get the long-term return. Typically, you are going to see most clients hold on to home loans for somewhere around 7 years. But over the last few years, you're seeing that number even shrink a much shorter time frame. Some people are only holding on to their mortgages for a year or 2 years before they refinance it and have the opportunity to get a better rate. So this is the reason why you're seeing a lot of investors charge points, because they are concerned that individuals are going to be in a situation that they're going to want to refinance over the next couple of years.
Oh, yes.
So that's the reason why you're seeing investors charging points in order to get home loans right now.
Excellent. Thank you so much.
Is there anything else that your clients are kind of bringing up that we
basically just the rates, wondering if they're going to go down, but as we both know, we don't see that happening in the future. And another issue is thinking that it's going to turn from a seller's market to a buyer's market, and there is no indication of that anytime soon.
We're going to continue to see this inventory issue.
Yes.
There's no short-term fix to get us out of this inventory issue. So I would probably say maybe a couple of years,
yes,
that we're probably honestly looking at being in a position before anything could change. I mean, you're going to have builders keeping up with the demand, and then not just keeping up with the demand, but covering the spread between the shortage of inventory that we've had and then meeting demand, right? So that's not probably going to change. And I've already seen some news that, a lot of builders are starting to slow down a little bit.
Yes, I have to.
Because, they're concerned whether or not they're going to be able to, cover the cost associated with a lot of the, the products and inventory that they're building. It's costing them a lot more, and they're worried that they might not be able to sell and make enough profit to survive. So, I think that that's another good indication that could actually stretch out the inventory issue even longer than a couple of years.
Yes, I agree.
So it's kind of scary from a perspective of, first-time home buyers, at least.
Yes.
If you already have a home, or if you're getting into a home sooner, inventory issue could be a benefit to you, right? Because the sooner you get in, the better chance that you're going to have to capitalize on, the appreciation associated with the property. And, I ran some numbers off the top of my head. I think the cost of waiting for buyers right now, it's pretty impressive to really put some numbers to what it really costs to wait 6 months or a year. And if you ever have clients that would like to have this information, I can actually break it down and provide them with the exact details of how much it costs you if you wait 6 months, or if you wait a year, or if you want to wait 2 years. Like appreciation, the loss due to some change in interest rates, the numbers are pretty staggering. I mean, in a 6 month period, you're talking about, like $11,000 on a $300,000 home. That's a big number in a short 6 month period.
Yes,
and you talk about it waiting a year on a $300,000 house, you might be looking at like $20,000.
That's some great information to
and that
have.
number keeps going up the longer you wait. So
yes,
I would encourage all your buyers, now is the time to buy.
I absolutely. And then that is a great knowledge too. And that's something I can pass on to my clients too, so they can actually see the numbers of what it costs now versus if they do wait, how much money they can lose. So that's some good information. Thank you, Kyle.
Awesome.